Doing, ladies and gentlemen, good evening to you. S&P 500 ripping to the upside, Dow ripping to the upside, Nasdaq ripping to the upside. This China situation is unsustainable, came the news. Looked like we're rolling back, and then we had another bid coming in. This is the headline-driven market we're in. Give me a shout if you can hear me, see me. I think we're going to double-check these things before I come on. But if you can't, I might be able to troubleshoot and help you out. Thank you, Sue, for a thumbs up. You can see my screen. That's good. George, appreciate it. Martin, Mr. Winthorpe, that's a great movie. Grant, Joel, appreciate you, gentlemen. Okay, interesting fact for you. Yesterday, the S&P 500 had 10 15-minute candles consecutively to the downside. It was, what time were we yesterday? Started around 2:30. Rolled down, 2% drop, 15-minute candle, red, red, red. Then today we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 to the upside, starting a little bit earlier, 1 o'clock, 1.5% move, started to roll back, and then they had that headline come out. So who knows? And also what I thought was interesting, we'll get started, we will. But Bitcoin, now I'm not a huge Bitcoin fan, but hey, doesn't mean it can't be. It's not interesting to watch. Michael Saylor, who's, those of you may know him, he owns the CEO of MicroStrategy. His remit is to just buy a load of Bitcoin, just keep buying Bitcoin, buying Bitcoin, buying Bitcoin. That's a whole other topic. But interestingly, a few days ago, we rallied 22% off the Bitcoin low. If we'd fallen by that amount, he will be below his liquidation point, which might be of interest to some of you, but others maybe not. Gold is rocking back a smidge. We've got dollar actually maybe finding a bit of a bottom here. Who knows? Who knows? Headline-driven market should be very, very careful, please, at the moment. Make sure, we've talked about this before, I've listened to my podcast, talk about volatility emergency broadcast. But I think the most important thing is obviously be aware of it, but just keep hard stopping. You might be one of these traders who puts a soft stop or mental stop in, but with this breakout we have in volatility, headline risk, it makes absolute sense to just make sure you've got hard stopping, just in case. Okay, so shall we get started? Let me just double check this. It's just you people saying they can hear me. That's good. All right, so today we are going to talk about cognitive edge and mental processing. So that's a fancy title, isn't it? Is it really need that much? Yeah, well, today we're going to talk about mindset and upgrading your thinking to match your ambitions as a trader, because we'll know that really a lot of the game is in the mind. You may have struggled with many decisions that you've made, decisions you haven't made, wondering why you're making those decisions. We're going to dig into that today. But before we do, a great quote here from Stanley Druckenmiller. I've always made my money from sitting, not thinking. After I make a trade, I still worry. He still worries after he's made a trade. Worrying is what keeps you sharp. So we're not trying to be robots here. We're not trying to eliminate any of these emotions or thinking. We're just going to readjust how we frame a lot of things in our mind. And I think this is, following on this Trader 2.0 series this month, it's just a way of elevating your process, your mindset, and the way that you perceive different risks in the market, different variables in the market. Oh, by the way, we are so close to hitting 1,000 registrations on this trader series, and I'd like to just tip over the line. So if you do me a favor, if you like this, share it with somebody else who you think is a trader who would benefit from it. It would be nice just to stroke my ego a little bit. Just get that 1,000 print. Just want that little print. Just a little print would do. I'd be like, okay, yeah, that's good. So anyway, I appreciate you turning up for this. Appreciate you watching the recording. Before we get into it, let me just remind you, gentlemen and ladies, that of course we're in a dangerous, risky game that we play. It is margin, and if you use margin, double-edged sword, works very, very well. If you're too long on margin today, you make a lot of money, doing very, very well. If you're short, you are getting smashed. So I know that many of you understand this already, but I want to make sure that if there's any new people listening to this, who haven't traded before, that you understand the product and instrument you're trading, especially if you're trading on leverage. Most people don't do very well in the markets, and you can lose a lot of money very, very quickly. We try to use risk management tools to reduce that. That's what stop losses are for. And we can't eliminate completely, we can reduce the risk. So there are ways and tools that we do that. And we try to uncap our upside, try to cap our downside, and play the game where we use leverage and margin to our advantage. But the numbers are the numbers, right? I'm not going to sit here and pretend that they're not the case. It is dangerous. Dangerous. It is risky. So please understand the nature of the instrument that you are trading, especially if you're trading a CFD or a spread bet, or even any other instrument, to be fair. Okay, so last week, if you were on last week, this was a slide from last week, and we talked about what is edge, market edge, trader edge. Oh, one more housekeeping thing. If you haven't got the recordings, it should be fixed now. There was a bit of a technical issue about getting the recordings out. If you'd like a copy, just reply to one of my daily emails, which I know many of you are on. If you're not on, you go to tradersmastermind.com, sign up for my free daily email there. If you reply to that email, Armin, who manages my inbox, will send you out a copy. And I don't know why I'm saying on this, because you might, maybe we didn't get the previous one, let's say. If you got this one, maybe you wouldn't be listening to this because you want the recording and you won't be here anyway. But you get the point. If you haven't got it, we'll send you a copy. That should be fixed now. So last week in the Trader 2.0 webinar series, we talked about what is edge. And I believe we've got market edge and trader edge. And I talked a lot about, hey, we know that there's often edge in the market that plays out all the time. Trends, exhaustion, news, large orders, like we go on and on. But there's also trader edge, right? And that's how you develop your edge, how you blend those two together to create actual functioning edge that's going to generate alpha for your trading account. Execution skill, mindset, trade management, market intuition, and feel, the ones we covered. Today, I want to drill right into mindset and doing the hard thing, because that's what I think that's what many traders struggle with. Openly transparent here, really struggled with discipline and mindset in my early years. Started trading in 2001. A few years in, I was still struggling with discipline. Oversizing was the big thing for me. Not having control over my emotions, using emotions to splash out orders unnecessarily. And it takes time, right? It's not an instant fix. But I think that for many people, they struggle with this thinking. And what I want to do today is really distill a lot of this down into a couple of core themes that you can help guide you through the trading day, right? Because there's some great books out there. You've got Trading the Zone there, and obviously Tom Hoogaard's book, Best Loser Wins. Great mindset books. It's not necessarily mindset, but there's a big chunk of mindset stuff in those books there. And others out there, great trading psychologists. And I'm not a trading psychologist by any stretch of the imagination. I'm a trader and have been for almost 25 years. So I know and I feel it. I'm in the trenches. I understand these actual thoughts that we have. Why do we lose control of our thinking? Why do we suddenly wonder what's happened? Why do we go on tilt? All this type of stuff. Now, I understand from observing traders who are growing and developing that everyone's different. One man might suffer with FOMO. One man might not even care about FOMO. Another one might be really revenge trading. Another one might not. So I know there's all variabilities there, but it all comes down to a couple of commonalities very often. So in the next 45 minutes or so, I'll talk for 45 minutes. We'll do some Q&A at the end, and I promise I'll give you opportunity to ask questions. And I always say, listen, I don't pretend to know everything, even though I've been in the markets for a long period of time. I don't stand here or sit here and say, hey, listen to me, I know everything. I just share with you ideas and concepts that I think are valuable that you can either choose to take away or discard as fits you, your trading, and your personality. So I talked about that many times before, so I won't go over it again. But 45 minutes today, there was some Q&A at the end. So today, embracing discomfort and pain, that's going to be the chunk of this, how we get around this pain and discomfort that comes from the decision-making process of being a trader, making those clearer decisions under pressure, thinking in terms of probabilities, not being perfect, maybe how we can map some elite models from other fields. So I'm a big advocate of this. I listen to a lot of business podcasts. I listen to a lot of just general podcasts with experts, like you've got your Joe Rogan stuff, you've got Diary of a CEO, Andrew Huberman, Lex Friedman, who else have we got? Sean Ryder, who is a bit, is it Ryder? I think it's Ryder. can't remember. These kind of people who interview experts. So I like listening to those type of things. Maybe you do too. And often some of the takeaways I get are like, what can I take into my own world, my trading world? How can I become a better trader? Listening to this general in the military, listening to this elite athlete, listening to this MMA fighter. That's nothing to do with me. I've been in the military. I'm not an athlete. I go to the gym. Class me an athlete, and I haven't been in the military. But listening to all these different people, we can take bits and pieces. So a few slides on that at some point, and then thinking about how we make quick decisions versus slow decisions. So let's face it, right? Let's be brutally honest with each other here, ladies and gentlemen. Let's keep it as real as we possibly can. The technicals are easy, right? They are. Unless you're brand new to trading now and you're joining me here and you've never even seen a chart in your life, in which case you're probably like, this is the wrong webinar for me, and come back next month, because it probably is. But I'm talking to you, you've probably been trading for a reasonable period of time. You understand the charts, you understand the charts do, you understand support resistance, you understand the main elements of a chart. And sure, they're still learning today. You're still maybe learning some of the time of day stuff. You're learning which indicators you want, which you don't want, structures, trends, how to get on pullbacks. Fine, those are the nuances, but the actual technicals are pretty easy. You can learn those in a weekend, right? You can go to a course, you can read a book, free stuff on anywhere. It's not that hard. And anyone can talk through a good trade with hindsight, right? But here's the separator. How do you execute your trade when you're scared of losing more on the day? When you're down on the day and you see the setup you want, how do you still execute that with authority and confidence? How do you say no to a play that you're like, oh, I really, really want to take this trade because I feel like we're going to rally off here and I want to get back to green on the day, but it's just not ticking my boxes? How do you have the robust discipline and fortitude and strength to say, no, no, no? How do you sit on your hands when the trade looks great but just doesn't tick the box? We're like, no, no, I'm waiting for a flush. I'm not buying this until I see that flush. Yesterday was a great example on the Nasdaq. You went in too early on that bounce yesterday, you were getting your face ripped off. It was just cleanly sweeping through bids. But if you waited and patient, you got that last hour, 30 minutes bid. How do you hold a trade? Here's a big one. How do you hold on to a trade? It's got a big fat unrealized P&L. You can see it. It's right there on your screen. You're like, oh, there it is. And you see it, you feel it, you imagine it in your account. But you know that price at the more, excuse me, more to move. You want to trade the actual chart rather than your P&L. How do you do all these things? And I'm just a few examples that you've probably lived yourself. I know I certainly have, where we've had these thoughts, we've had these ideas in our mind, and there's a little voice that just says, just grab that P&L. There's a little voice that says, just take that trade. There's a little voice that says, I want to get back to green on the day. I don't want to be red on the day. So many of these trading scenarios come down to how and why we make decisions. So I think we can all agree that there is a huge edge, if not the edge, is in your mind, right? If the technicals are relatively easy, if drawing on charts and drawing pretty lines and putting all the stuff on there is relatively easy, which I think we probably agreed it is, it's not trivial, right? There's stuff to learn, there's more to grow, there's more to learn to grow. But the big edge comes from how we process that information, right? And think about this from the market, over these couple of decades, plus I don't know how long you've been trading, but setups come and go, right? I've got some setups that worked fantastically well years ago and have not worked since. And maybe they'll come around again, who knows? But thinking, the improvements in thinking and the building of your mindset and the discipline and the ability to make good decisions, that never changes. That only compounds over time. So if you're working on a trade setup idea, strategy, methodology, plan, fine, good, you must. But bearing in mind that goes up and down, that changes. 1 minute you're buying dips in a bull market, next no, you're not buying dips, waiting for the flush. You change the way you approach the market, right? That's always going to be the case. If you're in the market for another couple of decades, it's going to be like that. But your mindset, you're stacking and stacking and stacking improvements as you go. And so being able to make good decisions under pressure, especially for an intraday trader, that's a real edge and something that you can work on daily to really improve, right? Because, in trading, you're not just trying to compound your account, you're trying to compound your mindset. There's a great quote here: in trading, compounding isn't just for money, it's for mindset too. And I want you to think about that for the next few minutes or so as we talk through this mindset approach and anything else you do, whether you're reading some of these great books from Steve Ward, Tom Hugard, Mark Douglas, Brett Steenbarger, all those type of things. just thinking, hang on, every little bit I do is helping me compound into a better mindset, better mindset, better mindset. It's never going to be a straight line, by the way. We know this. Progress is never linear. It'd be so nice if it was, but very often it's down, it's up, it's down, it's up. It's kind of oscillating around a moving average. As long as the long-term moving average is sloping up, then our mindset is improving. Okay, so I think there are three primary drivers of poor trading decisions. Some people may disagree, maybe they're a fourth or fifth, but I think there's three primary drivers. And Tom actually talks a lot about this in his book, the first one, Pain Avoidance. And in fact, any good trader slash psychologist will cover this with different lens and different viewpoint. And like I said, I come from a perspective of, okay, experience this, see other traders doing this. How can I frame it in a way that's going to be tactical for you to improve the way you think about things? So the first one is pain avoidance. So you're taking a loss, stopping for the trading day, holding a trade, all these things that we know, depending on how you trade and the way you trade and methodology, can be painful, right? And you might not express the pain. It's not like being tasered, right? But it can feel like that mentally. You got that trade you've set up, you've waited for so long, you take it, it just runs straight to your stop. It's like, oh, there's a little wince there. That's a little bit of pain. You're stopping for the trading day. I know many of you struggle with this. You have a daily risk limit. You hit the risk limit quite early on, and you go, yeah, but I think there's more opportunity. I'll carry on trading, because it's hard to pull yourself away from the screen to feel the pain of crystallizing the red day staring you in the face. You've come out early in the day, you've made a few errors, you've hit your loss limit, and pulling yourself away is tough, right? You go, oh God, I want to keep on trading. Holding a trade, big fat unrealized P&L. Man, I would love to take that so much. And you know what? It's painful to hold it because I'm worried about it giving it back. These are sort of things that you experience as a developing trader, right? And then number two is pleasure seeking. So banking profits, that feels good, right? Listen, it doesn't matter who you are, Stanley Druckenmiller or a brand new trader just pumping in, a few grand into a trading account for the first time. Banking the profits, there's a nice feeling to it because that's the business we're in, right? We are traders. Our job is to make profit. And so we feel good when we're doing our job. Great. Couple of $1,000, $500, $200, $20, $8,000, whatever level you trade at, doesn't even matter. It feels nice to bank that. So we seek pleasure, and ending green, stuff like that, ending the day green, you feel good. We're ending the month green, the quarter green, the year green. Like I feel great at the end of the year, and I'm like, hey, you know what? I've had a decent year. It feels good. And sometimes, from a year perspective, sometimes you can be a little bit gun shy in December because you're like, you know what? I want to kind of feel good. And you know what? And from a certain perspective as well, if you go on a short term, you want to end the day green or end the week green, that's okay. Often people are like, oh no, why'd you back off the throttle on a Friday? When there's opportunity. Sometimes you want to go into the weekend feeling good and seeking pleasure and say, you know what? I feel good because I've traded well today. I've traded well this week, should I say? And that's okay. Sometimes we do something that's just in alignment with building confidence and boosting that mental fortitude as opposed to boosting the P&L. That's probably a separate topic completely, but we're on the lines of making these decisions that often aren't in our best interest. So number three is long-term versus short-term orientation. It's quite easy to want to bank profits now and say, yeah, well, I get a short-term 500 quid or whatever you're trading with. I'll take that 500 quid, great. Versus actually, you know what, if I did that all the time, then I know that over the long period, a number of trades, I'm actually going to lose, because the downside of these is that, I'm losing 500 quid, I'm losing. So actually it has a negative expectancy. I know that for long-term success, this strategy relies on me holding that to 2R, 3R, whatever it is, rather than just snatching it at 1R. So often we have to think, where am I headed as a trader? Is this decision in line with my long-term, medium-term, long-term outcome and goals? Or am I just seeking pleasure quickly? Do I just want that short-term success? We'll dig into more of those in a moment, but I think those are the three primary drivers: avoiding pain, human nature, right? No human wants to be in pain. Pleasure seeking, again, human nature, we all want to seek pleasure. And long-term versus short-term orientation. And we see that in a lot of things with human beings, right? The short-term gain of enjoying that cookie versus long-term benefit of actually feeling like you look good in the mirror. I'm simplifying it, but you get the point. Okay. Pain avoidance is often behind these discipline issues. And let's dig into this for a moment, because if we can think like a trader, the trader 2.0 version of you, we can just be honest with ourselves and say, listen, a lot of the decisions I'm making at the moment aren't optimal. That they're not serving me. And so one of the objectives today for you, and maybe I'll give you some stuff to kind of work on after this, is to really dig down and don't spend hours and hours on this. I'm not a big fan of doing silly things like that, but just some thought on, okay, listen, why am I making some of the decisions that I don't want to make? And if you're honest and frank with yourself, it's very often pain avoidance. Think about if you're down, you don't want to lock out for the day because you want to end green. You're in pain now. You're going to seal that pain in. You feel much better if you end of the day green, like it or not. I don't want to miss this trade. It's coming to your level. That's where the FOMO comes in. I don't want the pain of missing the trade. Now, I know for some of you, one of these pain is greater than the other. Some people don't care about FOMO. Some people really care badly about ending the day red. So we don't care about ending the day red. You get the idea. You've got to work out the kind of danger zone for you, or the sweet spot for you. And ultimately what happens is that it may well be one trigger, right? You end up just taking a trade you shouldn't do. You end up just taking extra trade that's over your daily risk limit. You end up doing the stuff that just deviates from what you said you were going to do. And then that turns into oversizing, chasing, revenge trading, because it amplifies the pain. The trouble is, sometimes you get away with it. You're like, I'll just take this trade a little bit more size. It goes back to green. Like, oh yeah, I feel great now. But deep down, you've got that regret. You've got the regret from over trading. You've got the regret from oversizing, should I say? So, what I want to say is this: is that the more experience you get in the markets, you're still going to feel these little things like, listen, if I have a trade, I'm waiting for it, and I'm waiting for this flush, and I'm like, this is going to be lovely long. I just need to wait for that last little flush, which is the type of trade that I like to take. I'm waiting, got my ticket loaded up, the market comes lower, and it just rips off without me. I don't get it. I'd be lying to you if I didn't say that annoys me. Of course it does. I'm like, damn it, would have been like to get. But the difference is, I've experienced that so many times that it dissipates very, very quickly. So just know that as you get more experience as a trader, and this is the good thing about having the screen time, regardless of where you are now, is that the more you experience it, the less it will impact you. And you're a human being, you'll still be like, oh man, that would have been so nice to get on that. A few more ticks, one more flush, whatever the setup might be for you, just missed out, just got stopped, whatever it is, there is still going to be a human element of, thing's a bit that, it's annoying, because we're humans, and we should never try to eliminate that completely, but just know that it becomes less intense and it dissipates a lot quicker. So there's always going to be that element of draw as a human, however experienced you are as a trader. Even Stanley Druckenmiller, one of the best traders probably in the world, saying there he still worries about positions. He's a human being, but he's learned to not allow that to influence and pollute his trading decisions. So you always need to be on guard, right? As you improve as a trader, it will get a little bit less, but you always must be aware. You're a human being after all. Okay, so from the pain perspective, how do we, let's cycle back just for a moment. How do we identify which of the issues is driving the decisions that we don't want to make? So we talked about some of those examples there. And again, this is Trader 2.0, so I'm not going to spend too much on the simplistic side of things. I want to make sure we keep kicking this up a gear. If you have got questions, stick them in. I'll get to them at the end. I know, recognize that I might be going a bit quick and I might be glossing over some things, but I want to keep it at that sort of more intermediate advanced level. So how do you identify these issues? This is the really key part for traders, to just developing traders, any traders to do, is to really audit your thinking. And this is a skill. This is a skill to learn. Don't get me wrong. It takes some time to do it, but once you do it, it's a massive unlock. It is a massive unlock. Actually, not to be honest with you, not only just in trading but in life. If you can really audit your thinking and you just go, just because I think it doesn't mean it's true. Why am I thinking that? And sometimes that is all it takes for it to dissipate. So from a market perspective and a trading perspective, what I want you to do is think, okay, where do your thoughts go during the trading day? Most traders don't think about what they're thinking about. Could have put that more eloquently, but you get the point, right? Examining their internal dialogue, because very often that internal dialogue reveals that there's an emotional cloud, there's an emotional pollution on the next trade. Because we all think we're very, very clean and clear, and we see the trade, and we're going to come back, it's going to hit the support, we're going to pull the trigger, put the stop in, blah, blah. But actually, if you think about why you want to take the trade, very often the thought is because I want to get back some of that loss from the earlier morning, or because I want my equity curve to start ticking up again, or because the market's volatile and I believe that as a good trader, I should be taking advantage of this. And just being honest and frank with yourself about the way you're thinking about the next execution. And like I say, you're never going to be perfect, but we just want to monitor what you're thinking. Okay, now very, very often under high volatility or P&L volatility, i.e. your account balance is swinging around, this really kind of amplifies this thinking of I'm scared of doing this, I'm worried about doing this, I'm trying to avoid this, I'm trying to get towards this, whatever it might be. And so, when you're under pressure, and things aren't going your way, or you feel like you're under some stress in the market, use that as a good opportunity to audit your thoughts. And listen, you might not always act on those, but sometimes you might see a market rip off. Listen, I do this all the time, by the way, still. So just because you may not have 25 years experience, people have got 40 years experience. I'm not saying I'm the font of all knowledge by any stretch of imagination, but I still see a market rip off and go, and my instinct is I'd like to be on that. But I know it's very quickly I go, okay, well, what's your trade idea from this? Do you want to wait for a pullback, a short pullback, like a flag type trade? Do you want to wait for a deeper pullback here? Do you want to wait for it to rotate back to kind of a VWAP? Are we ever going to get there? Would you rather wait for this sequence to unwind itself and then look for a reversal? And so I program my mind to go, right, well, plan the next move, as opposed to trading me 2005 to 2006, maybe the situation now, which is I jump in because you're frightened of missing the move and you want the joy of catching that move. And so just audit your thoughts. And when you kind of start to do this, you can start to document threads of similarities between the way you think. And this is the key way to really work out what drives your decision making. Maybe it is seeking pleasure, maybe it is avoiding pain, maybe it's a bit of both. But once you've analyzed this and you've identified why you do this, why you trade the way you trade, why you make the decisions you make, you can then take steps, which we're going to cover in a moment, and actual tactical ways to reprogram the mind and say, listen, we don't have to act out of a pain avoidance here. We can put this into perspective. We have to program our mind not to just seek this pleasure all the time. And so trading becomes much more relaxed. It becomes more a case of, okay, is the setup valid? Do I like the setup? All the stuff that we know we should be doing, as opposed to letting our emotions drive our decisions, driving revenge trading, driving over trading, getting caught in chop, all the stuff that we know can be eliminated, but it's just working out a good structural way of doing it. Okay, so something to think about here is what do most traders do, right? And very often, if you see a market condition, you a good frame of reference is to say, what does the majority of people do here? That trend example is great, right? They're chasing it, they're buying this. And no, it's not to say it's the wrong decision. That's not to say that the market couldn't go higher, but you must do it in a structured way, right? We don't want to be making impulsive decisions. And so what's the usual losing trader's decision here? To chase that high, to buy that breakout, to get involved when this is chopping around and try and predict whether it's going higher or lower. And just actually, you know what, very often you can think, if you like me, you can just think about how you used to behave as a trader, or how you behave now if you're still in that zone of kind of developing. How do I normally, well, I normally get caught in this chop. That's what most people do. They try and predict it's going to break out. They try and guess it's going higher or lower. They try and overanalyze the headlines and think there's some sort of macro genius. No, I'm not going to do that. I'm just going to wait. I'm going to see this level break and I'm going to play the supply-demand imbalance and accept that actually, a lot of the decisions you make are not going to play out correctly, or should I say, they're not going to reward you immediately. Right? You're going to make a decision, and it's the right decision, but it's going to lead to a loss. Accept that. Most traders struggle with that so much. They're like, I know I should hold this trade. I said I was going to hold this trade. They hold this trade, it reverses on them. And they go, damn it. Wow. And then in reality, it was the right decision because you said you were going to hold the trade. You made the decision with the information you had at the time, right? And you planned it and all this type of stuff. So that's something to do. Most, struggling traders think that actually, hey, you know what? I have to make a decision now that's going to make me win the trade. There's a subtle difference in the way to think of these decisions. It's I want to make the correct decision now. I don't care what the outcome of the trade is. It doesn't matter. I want to make the correct decision time after time after time after time after time after time because I know that that will play out. If I'm flip-flopping back and forth and I'm like, yeah, I got it right. Yeah, I got it made money and I made money. Yeah, I made money. You're making incorrect decisions. That's never scalable and it's always going to catch you out. So think like this. Hey, do you know what? I want to make the correct decision. I'm not trying to guess where the market's going to go. I'm not trying to guess if it's going to hit my target. I'm not trying to gather all this. I'm going to make the correct decision this time, and I do not know what the outcome will be. And that stings. That uncertainty stings. I get it. And that's painful. And very often you want to just say, you know, I'll just take my profit. I don't take my profit because that feels good. And I say $500 and I feel great about it. But actually, you know, that's not the correct decision for long-term success in the markets. We want long-term outcomes, an edge that's going to last you a lifetime, which is this edge. Setups come and go, strategies come and go, methodologies come and go, but this is always going to be here. This is always going to serve you if you build it and craft it in the right way. Okay, so something you can do that really helps you kind of deal with discomfort, because all the things we've covered now so far are uncomfortable, right? Very often we have to make the uncomfortable decision to hold the trade, and we so badly want to take that money, to not take that trade. We so badly think it's going to break out to highs, but we're missing this piece of the puzzle that we know is key for our particular setup or strategy. Locking out for the trading day when all we want to do is just carry on trading, get ourselves back to green on a day, whatever it might be. I've had 3 goes at this trade. I know it's going to break out. I said I was going to take 3, but I'm going to take a 4th because this is going to be the day it breaks. It's going to be the time it breaks out. I must take it. We've all been there and done though many multiples of those and different various permutations from that. But here's some way to train yourself. I know I talk about this and a lot of people wind me up with this type of thing, but one of the reasons that I really am a big fan of things like cold showers and cold plunges and like, oh God, Mark, you've gone out of this for years and years. And because it forces you to deal with discomfort. And you know what? Many of you have done this, and you're an advocate now. You're like, hey, Mark, you know what? I thought you were an absolute clown for going on about cold showers and cold plunges, but actually, I started to do it, and I realized it helped my trading loads. And I'm like, good, good, because you know why? Because you have that mental voice that says, that down, get in there, man. It's cold. Look at it. It's cold. Why would you want to get in there? It's going to be you're going to be chilly. It's going to be uncomfortable. Just like the little voice in your head that says, just don't hold the trade, grab the P&L. The easy thing to do is there's a nice $500 there. Just grab it, stick it in the trading account, move on to the next trade. Just like that voice says, well, carry on trading. You can overcome it and you learn to create this controlled adversity. And you go, you know what? No, I know it's going to be cold, but I'm going to do it. And you can do this with intense workouts. You can do this like really red hot saunas, fasting, if you like that type of stuff. All these, whatever it is for you, was in a trader who was doing 100 push-ups or something, right? Whatever it is, some adversity that, and what you're trying to do with this. And yeah, we can go on about the health benefits of workouts and cold plunges. Forget that for now. I'm not Andrew Huberman, but I'm a trader. And I do know the more you condition yourself and put yourself in a situation where you have that little internal dialogue of that little voice going, no, don't do it, versus yes, do it, whatever that decision is, whether it's cold plunge, whether it's taking a trade, whether it's stopping on a trading day, the more you can train yourself to deal with it, the better you will be. And so when you constantly get a voice that says, oh, no, I'm not doing that, you go, shut up. I am, because I said I'm going to, just like I'm going to hold this trade to target, just like I'm going to lock out for the day because I'm down on my loss limit for the day, just like I'm not going to trade more than this size, just like the things you say you're going to do that you don't do, you start to condition yourself to do these things. And just watch how your mind responds and listen. And the beautiful thing is it's like luring out this little internal voice. And you can put yourself into this controlled adversity and watch your mind react to discomfort or pain, right? Watch it and notice how it says the tonality of the voice and how it tries to convince you not to go in the cold plunge, or, hey, you know what, you said you weren't going to eat today, or you weren't going to eat any chocolates there, whatever it might be. I just have, you notice how it becomes the world's best barrister, the world's best convincer. And it's the same in trading, right? It's exactly the same in trading. So these are whatever it is for you, it absolutely transfers over to trading, to ability to sit with discomfort. And I think Steve Ward said it in this book. He was on my podcast. If you want to go listen to him there, he said it in the podcast as well. Is you've got to get uncomfortable with being but sorry, you got to get comfortable with being uncomfortable. That's why Steve Ward, I mean, he's really, really good at kind of putting that across and making you realize actually you do need to do this. And if you can change your narrative to, hey, do you know what? I am going to be frustrated for a moment if I stop for the day when I'm supposed to be on a lockout, or if I don't take this trade. I'm going to be a little bit annoyed. I'm going to have a little bit of pain. Accept it. I'm going to miss this rally. Fine. But if you change the narrative in your mind to, you know what, this is setting me up to be the trader I want to become. This is aligning me with the decisions that I know are going to serve me long term, rather than the short term gain of, I'll snatch the profit. I'll just take another trade on this breakout. I'll just do this thing, and you might get away with that. That's the worst thing that can happen, by the way. You break the rule and it actually works in your favor short term, because you get the pleasure of it. You get the kind of breaking the rule, breaking the discipline, doing the stuff that you don't want to do, you shouldn't be doing, and then you get pleasure from it. So you're now hardwiring neurons. So it's even worse to try and uncouple those later on. So something to really consider is to put yourself into that forced adversity. Depends on seriously you take your trading, right? If you take it seriously like me, you want to do anything you possibly can to make yourself a better trader. You recognize the opportunity you have with these markets, the conditions, the environment we're in now, the technology, the spreads, all that. There's never been a better time to be a trader. You're here learning, you're spending resources, your time here now. And so doing these little things outside is just setting you apart from the pack, from the mob. And look at the stats at the beginning. We know the numbers, right? Those are the guys who aren't on here. Those are the guys who just don't do these extra bits. But if you go this little bit deeper and you wonder why you're making a decision, and you say, you know what, I'm avoiding pain. Okay, well, how can I season myself to not avoid pain or be comfortable with that? And so you again go down that rabbit hole of learning and improving and growing your mental capacity to deal with the challenging decisions that you have intraday, so that when you make them, you make better, slightly better, slightly better, slightly better, slightly better. You just become like more aligned with the trader that you know you can become, because you've got the knowledge, you've got the ideas, you understand about all the technicals and all the intricacies, but it's probably that little missing piece. Anyway, let's switch it now to long-term thinking. So Mark Douglas in Trading in the Zone, I keep pointing to my books there, you can see, I think they're out of focus, but he's up there somewhere. He's there. Trading in the Zone, he said this: the best traders think of themselves as a casino operator. They have a proven edge, and they know that if they keep putting on trades, their edge will play out over time. I've got a caveat to that in the next slide before you go, oh, it doesn't apply to me. But, I agree with this mostly. I don't need to kind of dissect this. I agree with this mostly, right? And the way that what he's trying to say here is that, you know, a casino does not know if that player is going to win or lose on that roulette table or the blackjack table or baccarat or slots, whatever it is, right? And they don't care, right? They just know that, and they're not worried about the outcome. They just know that over the quarter, over the year, over the long term, their edge is going to play out. Now, I appreciate we don't have a hard edge like a casino does, the 2 zeros on the wheel. We don't have the edge built into the slot machine, the game, whatever. I get that. And so, but we have to approach it from that perspective, that we are the casino, we're not the player. We don't know the outcome. We just know we need to make the correct decision at that time, which is let the trade play out, run it to target, pull ourselves away at the end of pull ourselves away if we hit the max daily loss limit. Don't go over this size. All the things that we talk about. So it's not just a trade perspective, like Douglas says. It's more all the correct decisions, knowing that making those with consistency, should I say, is actually how our mental edge is going to play out. So he was talking about this more in terms of actually the setup, the trade, the strategy, the trigger, etc. And that's valid. I do agree, but I think we can frame this from a mental perspective of saying, okay, listen, you know, I need to make the right decision at the time. I don't care about the individual outcome of this trade. If this trade, I'm going to hold this trade to target. If it goes one tick to it and reverses, then so be it, because I said I was going to hold this trade to target. And we want to make the right decision as many times as we can in a row, trusting that over time that's going to save us. Now, if we look at this purely objectively, right, the idea of locking out your day, many of you are day traders, locking out your day or week at a certain max loss limit. We know that that's going to serve you over time because it's going to stop that heavy equity curve in places where you're trading your worst, right? But it's the hardest thing to do. The hardest thing to do when you're trading badly is to scale down, pull yourself out of the markets. I know it's tough, and vice versa, but we know that we should be doing that because we know that's for longevity in our trading and to keep our trading account alive, keep us in the game, not do irreparable damage. And so that's the sort of example of the correct decision, even though the point you pull yourself out of the market might be the point you would have made a great trade for the day. But you know that over time that's the right thing to do. So think about this. Think about, your job as a trader is not to win every trade. It's impossible to do that. I think you know that by now. But what's your business model? The business model is to generate edge and let that edge play out over time. Market edge, mental edge. And if you can think like that, you can be much more strategic about the way that you make the decisions. And especially if you start to audit your thinking as well. Why am I making this decision? Is it because I believe genuinely this is a good trade? Or is it because I just want to get early green on a Monday morning? Right? These are all the things that you need to consider. I wanted to put this slide in quickly is that I think that the casino model that Douglas talks about, as in the repetitions of setups, there are some exceptions to this. And we've seen it recently, right? Some days you have to take trades that aren't in your playbook necessarily, but as long as they're within the risk boundaries, I believe they're okay. This is my personal preference. Some people disagree with me, that's fine. But I think there are some trades where you see it, you want to take it, it doesn't fit perhaps in your structure, but it's an unusual scenario, and you have to be comfortable with saying, you know what, this might be uncomfortable, and I'm taking it for the right reasons. As long as my risk is capped and my risk management is framed correctly, I can still take it. So I just wanted to put that because I think there's a lot of people spout the whole thing of casino model and Douglas, and I think that in the real world that's fine, but actually in the current conditions we've had a few opportunities, and if you do trade that type of way, then fine, where it hasn't been maybe something that can be repeatable, but it doesn't matter as long as your risk is capped. And again, it's making the correct decision at the time. Okay, so I asked ChatGPT to give me some mental models from other fields. So athletes, pilots, footballers, how can we apply those to being traders? When I did my private pilot license many years ago, and it's expired now, I did it for the love of getting the license. I flew once and then I never used it since. But hey, we used to have these checklists, right? You have these little spiral bound thing, and you do your pre-market. You do your pre-flight checklist where you go and you check the fuel, you check the tires, you check all this stuff, and you would literally go dung dung dung. You get in the cabin, you go dung 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 dung. Pre takeoff, dung 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 dung. When you're in the air, dung dung dung. We're about to land, dung dung dung. And I believe that even like many seasoned pilots now still do the same thing, right? We're up in the air, flying, massive Airbuses or whatever halfway across the world. They're still doing checklists because they know they don't miss anything. They know the decision making doesn't have to come into it. It's like, I need to check this knob works, this lever works, that button works, that's in the right setting, that does this, that does that, that's locked, that's not. It's just very simple. And so that's one way to do things. How do we kind of look at other fields like a pilot, like a footballer, right? If you look at the great footballers, they train, but when they're out on the pitch, they have to improvise. Same with traders, right? We train. We look at setups, we look at charts, we look at how things unfold, the opening range break, But then in the heat of the moment, things are slightly different. A cross that comes in from, I'm not a huge football fan, De Bruyne comes in, right? Is that going to be exactly the same each time? No, it's not. No, it's not. Bruno Fernandes cracking one in from outside the box. Is that going to be exactly the same position from his free kick all the time? No, it's not. He may practice them, but the opponent wall might be in a different position. The keeper might be standing in a different area. They might be having the pressure of being 2-0 down. You get the point, right? There's all these different scenarios. So ChatGPT said this, and I literally just copied and pasted from me because I thought we could talk about it rather than anything else. So athletes, the routine, and by the way, the idea is we're taking the mental models from these and deciding what aspects of this we want to implement in our trading so that we can become elite in our chosen area of expertise, trading. So think about athletes. They've got a routine. You see them before the Olympics. They have this mind thing. They come on with their earphones in. They see the swimmers and stuff. They've got a thing that they do to center themselves before the whistle goes off, the bell goes off, the gun goes off, whatever it might be. And so this is where we come in with our pre-market ritual, our checklist, our pre-market checklist. What's the overnight session done? What's the Asian session done? Headline risk, all of the stuff that we know we should be doing. Yes, it's valuable, but it gets you in a certain frame of mind, and it starts to help you audit your thoughts as well, because actually you go, do you know what? I'm acting in an elevated way here, and I do feel a little bit anxious because I've lost the last 2 days. There's your audit thought process coming in. So the act of doing the checklist helps you trigger that, and you say, you know what, don't worry, like the worst case scenario is the risk today, just trade, and you can start to soothe yourself and take yourself off that ledge, hypothetically speaking. Pilots talked about the checklist thing. I think it's great to have a checklist. Footballers, yeah, you structure, you train, but then you have to play, especially a discretionary trader, you adjust and adapt and calibrate to the conditions on the field or in the market environment at the time. Massive trend day rips off. It's very different. Like you start off a football game, and suddenly you go 2-0 down after the first 10 minutes. That's a very different game. You're like, well, I'm on the back foot now. We've got to kind of, especially if it's maybe a cup game or something with a lot more at stake, and you kind of go, well, actually, we need to adjust now to be much more aggressive. Trading, maybe you the other way around. If you have an early loss, oh god, okay, well now I need to be careful and not be so aggressive. I need to play a bit defensive. Or I need to adjust. I need to be aware that I've got the pain of the pleasure seeking of wanting to get back to green. So just the same type of thing. Special forces. I've got some great stories that I've heard, but I have time to share these things. I think I have on my podcast, but these are great. Actually, if you're into kind of military stuff and special forces stuff, listen to some of the stories from these guys, especially who went into the Bin Laden compound. It all went wrong for them, and I kind of thought, I get it, right? I'm not there executing Bin Laden for history. I'm there trading Nasdaq, right? I understand it's very very different scenarios, but from a mental perspective, everything went wrong for them, and they're like, well, what can we control? We can't control. I think the helicopter went down, or there was a problem with it. There were kind of people in there that weren't expecting. It was just very very different. But they kind of knew this, right? And the same with trading. We don't know what the market's going to do. We go in there prepared, like those guys went in there prepared, but they also knew they had to adjust and adapt whilst keeping calm. They were like, oh dear. I'm sure they said exactly that. Oh dear, the helicopter has gone down, gentlemen. What should we do? They kind of understood that they had a contingency and they had to adjust and adapt on the fly. And so I think the same with trading, right? We can't control the market. We can only control our response to the market. So their response to, hey, we haven't got no exit strategy now, and there's way more men in there with high caliber machine guns than we expected. How do we adjust and adapt? Well, we'll do this and this. You go into the trading day, you expect a mean reversion type environment. The market rips off to the upside. I understand there's not quite the same, but from a thinking perspective, this is very, very different. Okay, it's activating neurons in my mind of, okay, this is different. How do I adjust and adapt? And so maybe go and do your own research on things like this. Okay, so let's talk about cognitive load. So while we're talking about making these quick decisions, you're going to be very careful. I know we all think we're Superman, and I definitely thought I was Superman. I'm much more pragmatic now about my resources and levels of focus. But when you're 20 something and you're sitting there all day long, you think you can sit there all day, and you probably can. But recognize that however old you are, and it's not an age thing or experience thing, it's we've all got this mental fatigue, right? Maybe you've been busy doing something, maybe you work and then you come and trade, maybe you've been working out, maybe you've been trading all morning. You're going to make these poor choices towards the end of the trading day, right? And if you're constantly making decisions and choices, whether that's in a trading environment or work environment or family environment, and then you come in and trade the close, you're going to have a little bit more mental fatigue there. So just be aware of it, right? And so, not saying not trade it, because some people, that's the only opportunity they have. I understand that, right? You have your other requirements. You've got to do this, and you come in and trade in the evening. I understand that. I get it. But maybe recognize that you have got a bit of fatigue there. You have got a little bit of kind of pressure on you mentally. And so reduce the pressure by saying, you know what? I'm going to trade a couple of ideas, or I'm only going to trade long. I'm only going to look to buy a pullback here. Kind of really refine your focus down into one or two ideas. That's a really smart way, by the way, of trading in a much better, getting much better outcomes from your trades. It's saying, you know what, I'm only looking for one type of thing today. But if you're coming in the afternoon, you've already seen what the market's doing, so there's no surprise there. But you say, you know what, I'm only buying a pullback. And then it helps you go, okay, well, that eases the pressure of me looking for shorts. Where do I want to buy a pullback? Do I want to buy a deep pullback, shallow pullback? Am I moving average guy? And you start to then work through the stuff and workshop ideas. And so that's a really easy way of reducing that cognitive load, because the last thing we want to do, and even if you are completely fresh, come into the market and you're barraged with, oh, we've had a headline come out with a massive overnight range, dollars down, Bitcoin's rallying, gold's this. Sure, take the information in. It's interesting. It gives you the picture of the market's engine and what's driving things, which I think is an interesting perspective and plays a part, in your trade decisions to some extent. But don't bog yourself down with things. You decide on what you're going to do. Calm yourself. Just take as many of the decisions away from you as possible to reduce the cognitive load. So on that topic, think about the brain is always seeking comfort. What's the easy trade? The easy trade, which you have probably done if you're a day trader, is I just want to grab this breakout for a few ticks. I'll just buy this breakout for a few ticks. That's the comfortable trade. It's probably not the right decision, because doing that over time, very often we have that little fake out. Maybe it goes and then just drops like a stone. And so you're thinking, okay, hang on, this is my plan. I've done a lot of the legwork before the trading day. I'm only looking for these type of trades today. Or you adjust and adapt it based on what the open has done or what the first couple of hours have done, or however the market's unfolded before you sit down at your trading desk. And a lot of the trades as well, they don't feel easy, but if you pre-plan them, then you go, okay, I will buy a flush. But for me, a flush is an ATR of this. I want to see a range of this. I want to see a volume of this. I want to see this. And many people are like, whoa, you're catching a falling knife there. You're like, no, but I waited for this. My objective was I wanted to buy a flush in this downtrend. I've done nothing but wait for that. That's a far, far, in my opinion, less risky approach than trying to do this, trying to get long, trying to get short, have all this cognitive load. Then when the market's falling, like, should I be selling a pullback here? Should I do this? No. I'm just waiting for a flush. And we're still 100 points away from the level I'm even considering buying the flush, as an example. You can see how it's much easier to kind of go through the process and not let your mind get caught up in the pain avoidance, pleasure seeking. Okay, a couple of comments on losses. When you're taking the loss, I think we have to, and I get it, right? Nobody likes to take a loss. Nobody likes it. No one could sit here and pretend I don't mind taking losses. Nobody likes it. Now, the pain is, it becomes like a normal cost of doing business. You get so used to it that it's not an issue. But no one say they like taking a loss, right? There's a distinct difference. And so when you are crystallizing a loss, try to reframe it in your mind. This is a cost of doing business. This is a business expense. Like it's a cost of staying in the game. Losses are inevitable. I need to season myself to being so comfortable with taking a loss that it doesn't concern me. And yes, you might not get to the point where you're completely apathetic to it. That's fine. I'm not apathetic to a loss. No one likes taking a loss. But when you take the loss, you're like, it's just a nothing. It's a nothing. It's one out of how many thousands of trades I'm going to take. Hopefully not in the next hour, but over the period, right? And if it is tweaking you a little bit, then just learn how to reset yourself. Learn how to kind of use breath work, shifting your posture. I've got a desk that moves to standing. I can always move that back and forth because I just need to change the way I perceive things. What your self-talk is. If the self-talk goes, so I want to get that back, or I'm frustrated, or man, I got stopped out there and unfair. You need to just kind of reframe that slightly. And the big thing here, this is the big one, right? Separate your identity as a man, as a woman, as a trader from an individual outcome. Too many of us, and I hold my hand up here, was in this situation, stake our identity on the outcome of the next trade. And we do it subconsciously. We say to ourselves, you know what? I don't care about this trade. I don't care. 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 Click. Here we go. And then when it loses, your mind goes to, oh man, another loss. I'm not a great trader. I can't do this. Well, no, I just can't get it right. I can't. And we then just go down this spiral and spiral and spiral and spiral of, your identity is how the last trade. And then you make another trade and it's a win. You go, yeah, I'm a great trader. Look at me. I'm out. Whoa. And we do it subconsciously, right? We do it. And so be very, very mindful of that. When you catch yourself cheerleading yourself too much or berating yourself too much, go, whoa, one trade, pal, one trade. Just chill a little bit. This is the job. I'm doing the job, and the job involves losses. The job involves wins. The job is just letting this play out over time. Losses are part of doing business. They're a business expense. best in the world to take losses. If I feel like this after every time I take a loss, then I'm not going to be in the game very long. Sometimes it's that honest self-talk that's required. And you say to yourself, listen, mate, in the day, if you're going to beat yourself up after every single loss, it's going to be a very, very long journey for you, because old Stanley Druckenmiller up there, when he takes $1 billion loss, he's not going, oh my God. He's going, you know what? I'd rather have not taken that, but let's move forward. How can we kind of recover from this? So be very mindful of that. Running winners, the default, the losers, if you like, taking profits too early, it's fear. The solution, what a solution is offering you here is kind of visualize beforehand. So if you struggle with running the winners, I've got a whole other kind of, we've gone deep dive into this before, so just touch on this. I don't want to leave without saying something about this. But one way to help yourself is to use a time-based stop. I've got a stopwatch here that I often use. I want to make sure I hold the trade for at least a certain period of time or to a level. There are ways and tactics to run winners, but just remember that why you're snatching at profits is because you're seeking pleasure and you're avoiding pain. You want to crystallize that unrealized P&L, and you want to avoid the pain of seeing that unrealized P&L go against you. If you can overcome that, then you can trade the chart that's in front of you. Now, I do understand that the risk reward ratio is dynamic and changes as the trade goes in your favor or goes against you. I get it. You're just going to target, you kind of a little 10 more pips, you've got 100. You've got to adjust and adapt and be reasonably aggressive sometimes with trade management, or let the trade run, or let the trade mature. And I know there's no perfect scenario for that. We've kind of discussed this and probably in more detail at some point as well of how to adjust and adapt. But just from this perspective now today, what's your thinking? Why are you thinking of taking profits? Now, you might justify and go, oh, yeah, but yeah, it was an overnight, it's a little resistance level there. It's a Fibonacci. You can justify any reason, right? But in reality, you go back to the slide before, audit your thinking. If you're honest, and you've got to be to improve yourself in this game, it's probably because you don't want to give the money back. And that's okay for now. It's okay to be where you are now, but that's not okay to be in the same situation a few months down the line. So recognize it, jot it down. So you know what? I did take that profit because I was worried about giving it back. And not many people do that, by the way. Not many traders have the guts to say, I took that because they want to give it back. They will say, I'd say, just broken. They'll give a justification. I can find a justification why that's going to go up or down in the next 5 minutes and give you a very valid intellectual argument for, give me a market, I could give you it. But it doesn't mean anything. And this is the difference between the people who can just do the technical analysis and do all that kind of stuff, and actual traders. And you want to be the trader. You want to let those guys do all the fancy stuff and make these little words up for reversals and blah, blah, blah. And you say, no. I said I was going to hold it to target because I believe that's going to be a target. And I still believe that's going to be a target. And yeah, it came back and stopped me out. Fine. But I know if I do that enough times, that's the way to make forward progression in trading. And so I'm going to fight the urge of getting that short-term pleasure, dopamine hit, of snatching up that $2,000, $500, $20, whatever it is, and say, no, the trade is doing what I said it was going to do at the time. Everything's going to plan. Sit with it. Then there's that subtle shift in thinking. And just to repeat myself, because I think it's important, it's okay to be honest and say, I took that because I was fearful. I took that trade. I chased that trade because I was fearful. I took the extra trade because I wanted to get back green, and being frank about it. But then it's not okay to keep doing that without trying to do something to improve yourself. That's what we're trying to do. We're trying to get to the next level. I'll skip this slide here. And I'll skip this one as well. So let's skip that one as well. Yeah, let's run on to the last couple of slides here, guys. So the real key, if we are trying to be honest with ourselves and be frank about why we make the decisions, that's the first port of call. If you can do that, you're ahead of the game already. Now we're logging down our thinking. If we're auditing our thinking, going back to what we said before, thinking about why we're taking the trades we're taking with an honest audit. Hey, you know what? I just wanted to get back to green on the day, and I overtraded. Fine. I snatched at profits because you get the point, right? And then what are the beliefs that are driving those decisions? Well, the beliefs are that, I feel like I really do this a little too much. I need to do this. Identifying exactly why you make those decisions. But the beautiful thing is that if you can really shine a light on, hey, I'm acting out of fear here. In these conditions, I'm acting out of fear. And this is how you do it, right? When you go back to the journaling slide for a second, when you're logging down your thoughts, and finally you need to log other stuff as well. But when you'll start to identify a moment in time during the trading day, trading week, or equity curve position where you start to make decisions based on avoidance of pain or seeking pleasure. You may go into the trading day being very neutral, making a trade that's not avoiding pain, it's not seeking pleasure, it's a nice, structured, perfect trade that aligns with your trading plan. Click, you take the trade. Now, you may then get into a situation where you have 2, 3, 4 losers, and that's your trigger for now taking trades to avoid the pain of crystallizing the daily loss. Or if we extend the time frame, maybe your equity curve is down X amount from a new high you had, and now you're going into the day because you want to see that equity curve back to highs. So again, you're avoiding pain, you're trying to get to the pleasure of, hey, my equity curve is back at highs. Often for many traders who are developing and have gone through the process or some process, it's not that you're making every decision from an emotional perspective, it's that there's a trigger or a catalyst of some sort intraday, whatever it might be, maybe a rally, maybe a misfill, maybe a stop out, maybe a couple of stop outs in a row, that then causes you to make trades that are polluted with the avoidance of pain or with the seeking of pleasure. And it's up to you to identify where that is in your trading, because for everyone it's very, very different. But there is going to be a point where you start making decisions that really aren't in your best interests. So start to think probabilities versus outcomes. Am I thinking an edge, or am I thinking in terms of short-term gain? I want to bank that, I want to bank that, I want to feel good today, because that might not serve you long term. Are you following your plan, or are you trading from emotion? These are the audit processes that you go through. And is the discomfort you're feeling genuine, like, okay, I don't want to take this because I'm worried, there's headline risk coming up, or there's something genuine there, or is it just normal tension? It's up for you to kind of recognize that. Okay, so upgrading this mental edge. One, your thought quality, thinking better, thinking about what you're thinking, auditing your thoughts. Two, good decisions, making good decisions. Don't worry about the profit for each trade. It's the correct decision is what you want to optimize for, not the P&L. The P&L will sort itself out if you make good decisions. I want to make good decisions. And then three, constantly be training your brain. So putting yourself into these adverse conditions to get to a position where you can make a clear decision, so that when you identify your trigger, whatever that is, to make a weaker decision, you'll feel more hardened to make the right decision. And final slide I've got here is to try and identify with a discipline as a disciplined trader, right? Many traders don't make tough decisions. And if you kind of, if you know we said about identifying yourself and being your identity's kind of tagged the last trade, make your identity tag to being a disciplined trader and say, you know what, I make tough decisions. I do the stuff that other traders aren't willing to do. I stop out on the day. I add to the position. I do all the stuff that's tough, right? And the more you do that, the more you say to yourself, "Well, I know this is what elite traders do, and I'm now aligning myself with the decision-making process of elite traders, and that's the trader I'm becoming." And the more you can have that identity, the better. I don't know if any of you have gone on like a weight loss journey or a muscle gain journey or whatever it is, but you kind of have to go through that process of, I need to now identify that, and sometimes it takes a while. And then you get into mode of, right, well, I'm kind of dealing with my macros, this is my gym regime, blah, blah. And you then identify as someone who is disciplined with what they eat and how they train. And so you get the results. But until you get that, you don't get the results. You half-heartedly do it. You like, do this, do that. But if you're absolutely focused on hitting that goal, your identity has to be, and it just shifts. And then when you go into the gym, when you're eating, you're like, well, my identity is one of this person. I'm eating like an athlete. I'm disciplined with what I put in my mouth. And so this is the type of thing you need to do kind of as a trader. So something for you to do as we go to Q&A, by the way, write your questions in. This is something that you can do now for next week, for over the next couple of weeks. Design your own mental training regime. So pick one mental performance area to focus on, right? Whatever that is, whether it's avoidance of pain, whether that's pleasure seeking, are you snatching at profits, are you not quitting when you should, all this type of stuff. Build a plan and then a way to train that skill. And then start to build your focus, start to build your discipline, because those are the things that boost your confidence. They boost the way you can trade in the market, you have less anxiety, and be deliberate about this. So when you're auditing your thoughts, when you're writing down what you're thinking about, all this type of stuff is going to shine a light on what the action you need to take. Hey, you know what? I really, yeah, if I'm honest, I'm really kind of trying to avoid pain here. And that often comes into play after XYZ. And so you then have a thing of, right, that's what am I trying to solve for? How do I plan to improve that? Well, you know what? I need to put myself into a position of discomfort. I need to start doing this. I need to, when I'm in that position, be very aware that I want to make the easy decision and avoid pain, but I'm absolutely not going to make the incorrect decision. I'm going to make the correct decision, and the P&L will fall where it may. You know, that's how you kind of improve with stuff. So questions, ladies and gents. I know we've run through. I always rush through these things, and I hope you get some value from this type of stuff. But as a reminder, yeah, put your questions in the questions. I know some stuff coming in through at the moment. As a reminder, next week we have the last one in the Trader 2.0 series, which is technical tools used differently. And that's going to be, you know, a little bit more tactical, a bit more operational. This one's a lot of mindset today. So yeah, as you're putting the questions in, guys, I really want you to think about this. So just upgrading your mental edge. This game is so much about the mental edge, right? And yes, I do genuinely believe we have to have market edge, we have to have opportunity edge, we have to have this, but I also know that we have to just think differently to the mob. We can't think in the same way. And often that is just rewiring the way we think. It's saying, okay, I need to make better decisions. I need to really understand about why I'm making those decisions, why I am, avoiding the tough decisions. And sometimes we go through trading months and months and months and don't really audit exactly why we're making the decisions. So yeah, just something to consider. Okay, so a few questions in here. Thank you. All right. Alex says, hey Mark, once I've been consistent and disciplined for a while, I notice I start to relax a bit or lose focus. Very common, Alex. Very common. What's your advice for staying sharp and fully engaged after you've built some consistency so you don't drift or get sloppy? Alex, super common. If I'm honest, that's something I find myself doing. I have a really, really good run, doing very, very well. And if I'm not careful, I know that from history, I can start to get sloppy. I think just being aware of it is a good start, Alex. You say to yourself, hey, listen, I'm super, super aware of it. I know that after a while, I end up just being sloppy. I know that after a while, I end up just drifting, and just being aware of it and just doubling down on what got you to where you are. And so, whatever you've done to keep yourself focused and to keep yourself disciplined, then just make sure you keep it going and make sure you're alert to it and say, listen, this is my danger zone. Good for you for having that stretch of discipline. This is my danger zone. However, what do I need to do to combat that? What do I need to do to make sure that I don't get stuck in, situations I've been in many times before, and double down on what worked previously. Did you ask me something else, Alex? Sorry. No, you didn't. I hope that answers it. Alex, thank you. Okay, Gary Portugal, good to see you, pal. So many great points in this session. Thank you, especially the one about respecting one's process rather than seeking what feels good in the short term. Absolutely, Gary. And it's so easy to trade in the short-term benefit, isn't it? Short-term gain, pleasure, 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 pleasure. Snatch up profits, take the easy trade. But we know that doesn't have edge. Alex, again, what's your opinion on adjusting fixed R targets in a system? Is it better to lock a target based on real data or keep adapting based on conditions? Personally, I really adapt to conditions. I think you want to get to a position where you can adapt quite aggressively. So if today is a really wide ATR range, and you're in a trend environment and you're breaking out and maybe there's been some headline news, then you don't want to be just grabbing, a couple of R's. You want to say this could be the day where I can hold this till the end of the day. And I appreciate not every day is like that, but I think that maybe there's a sweet spot for you of saying, okay, I've got fixed R's, but I'm going to adjust them, but within these parameters. So I might go from 2 to 4 or 2 to 3, and then 4 to 5, as opposed to going from 2 to 5R, as a target. So you've got some flexibility. You go, okay, I think we're a wide range day, or I think I'm on a good I think a great entry, that's probably more like it than a wide range day, because a wide range day, your stop is probably going to accommodate the volatility, so that R multiple is going to be proportional. But if you've got a day where you've got a trade where you believe maybe you've caught that low, you're like, hey, you know what? That feels like the low for the next few hours. I'm allowed now to search for 3R and 5R on my scales as opposed to 1R and 2R. So you can adjust to aggressive mode, or however you want to label it, if you believe you're on something that warrants that. That's quite a good way of approaching it, I think. Royston, what's your email for the weekly email you send out via Traders Mastermind, Mark? Are you on the email list, Royston? If you are, it goes from, what email does it go from? Mark H, I think. I think it's Mark H we send it from. So, but if you reply to that, because the inbox is weird because it goes from the email server. If you're on the daily email, and you can sign up at tradersmastermind.com. If you reply to that, and then you want a copy of the slide, a copy of the recording, we'll get that sorted for you, Royston. Martin says, got to go. Thanks for the session. All right, appreciate it. We'll run over time. Yeah. Right, 2 more questions. I'll read quick. Ricardo, hello, thanks for the session. Very practical and informative. Thanks, Ricardo, for your feedback. Is the presentation available to download? Yes, you'll get a copy of the recording, Ricardo. Thomas says, thank you, Mark. Your efforts are very appreciated. Thank you, pal. Appreciate your feedback. A great session. Royston says, thank you again. Hi, Mark. How can we have a recording of the previous sessions? We can have a recording of previous sessions. If you, send a reply to my daily email, and I think we have access to all of those. If Pepperstone haven't sent you those, or if you're new into here now, then that's the reason I say reply to daily email, because that's a really easy way to do it, and I know that email will get to me rather than it going to spam or mistyping an email address. So reply to daily email, say, hey, can I have a copy of the recordings, and we'll send out as many of those as we have for you. I think I've answered every question. One more. Raymond says, I find it really hard to journal. Can you suggest a checklist or ideas on what you journal about every day? Thanks. Great stuff here. I've got a tip for you, Raymond. Raymond, apologies. Use your phone, ChatGPT, advanced voice mode. If you are somebody, and funnily enough, I was speaking to a trader about this literally 4 hours ago. If you're struggling to journal, I get it. Don't beat yourself up. Use ChatGPT's advanced voice mode and talk into it. And yes, you're not going to have your data, but you can talk into the stuff we're talking about now of, hey, this is how I made my decision. The market did this, market did that. You can still share the stuff verbally. And what that will do is it will start to collate it down into ideas and themes that you need to work on. So if over the week you've logged all your journal into ChatGPT, then over time you can say, hey, what are things I'm worried about the most, or what are things that crop up the most over this period of time? And you can interrogate it based on the data you've got, and it says, hey, listen, you know what, you're a little bit eager at the beginning of the day, Raymond. You're a little bit aggressive at the open because a few trades you've said I started out on the back foot and went red. Here's some ideas to improve that. And you can use it as a kind of a coach and a mentor to help you do this. Now, if you want to get more granular data and kind of numerical data, then you're going to have to use a journal of some sort and upload your blotter to TraderView, TradeZella, EdgeWonk, TraderSync, any of these out there, or create your own Excel sheet. Or even ChatGPT can do it to a certain degree. But if you want the mental side of stuff, then ChatGPT is great. If you want the analytical side of stuff, then do it that way. Thank you, Fabio. Great session. Thank you, Beth. Right, we'll call it an evening there, ladies and gents. Let's see what the market does from here. Headline risk, be careful, keep your stops in, and we shall see you again next week. If you want to share this link with other people, then please do. If you want to check me out, you can check me out. You can obviously check out Pepperstone, who without these guys, it wouldn't be possible. Go on their website, have a look at the options that they have available and the accounts they've got and the software. They've got new software as well. And also check out my website, tradersmastermind.com. Sign up for my free daily email. Phew, enjoyed this session. I'm glad you did too, ladies and gents. All right, take care. Bye-bye.